All right, good morning, everybody. Hope you're all having yourselves a fantastic Wednesday. Happy FOMC day, right? We got Fed decision here later this afternoon. Not expecting too much of a change, right, from the Fed stance. They've been pretty clear that they're going to be, very transparent, right, in when they're going to be cutting rates and their expectations. So we'll see how the market basically reacts to that here this AM. Obviously, generally, FOMC day, not a day where I like to be very, very aggressive, right? It's more of a who's going to front run the trending price action, right, prior to that sort of big news event. Now, yesterday, right, throughout the day, or when we look at the entire daily candle profile, we kind of got that, trend line breakdown or that bear flag breakdown that we've been hoping that we can get like a resolution from. So I definitely do have a bit more of a bearish bias than a bullish bias here this morning. But I'm going to want to see not only decent volume sort of still return, right? But then I'm going to want to be sizing down to about half size on anything if something does come up here, right? Generally, the move before the move is kind of like a bit fugazi, right? It's like not always 100% perfect. So I want to be sizing down for that potential risk here. Historically, FOMC, not a day in the morning that I am particularly busy. So I'm not going to feel pressured or forced to do so. Like I said, right, definitely have a little bit of a bias here to the downside. But we need to see clear resolutions, right, and for essentially that trend narrative to show up. The biggest fear here essentially is that at 2 o'clock, right, or 2:30 when Powell starts yapping, we can get a lot of new information that sort of invalidates whatever thesis one creates in the morning. And so if that's the case, right, and a lot of traders know that, then generally that leads to a lot of kind of participants on the sideline or kind of a weaker move, which ultimately becomes a little bit more challenging. But like I said, right, fundamentally we do have a little bit of momentum here as defined by yesterday's volume profile. So that will dictate or make it a little bit easier for us to get a confirmation here this morning, but just going to be accounting for that extra risk by sizing down here this AM. Besides that, right, on an economic calendar, nothing too crazy. We have ISM at 10, fine. Job openings, fine. But it's really this is the main event here, right? FOMC and Powell speaking. So we'll like to see basically how price action behaves around those variables. And then from there, right, we can hopefully take advantage of whatever PA is out there. So with that being said, right, let's start mapping things out here, figure out what we want to do, and hopefully have ourselves a very successful trading day. So good morning, Suresh, James, Michelle, Vilad, Dayon, Steven, Ruben, Craig, Salstein, Brian, Samuel, Gary, Antonin, Hazel, Nate, Joe, Kulu, and Greg. Hope you guys are all having yourselves fantastic mornings here. And let's get after it, guys. Keep adding, video a day here to this Trade Like a Pro framework as well. So if you guys keep an eye on that over the next couple days, right, we'll continue to be uploading some stuff there, and hopefully you're finding that relatively useful here this morning. So, all right, let's start mapping things out. Let's get going and figure out what our game plan is. So we've got we'll call it bear flag breakdown here. We're going to say, what's the count? What makes you say without volume, SSB? That's all good, all good. Yeah, so Kulu, I would say that it's a 2 out of 3 just because today's price action so far green, right? So we can kind of visualize that a little bit easier with futures. So we're seeing a green day here so far. So I'm going to call it a 2 out of 3. The dip buy here, right, would be a retest of the trend line, so 5,100, right? Or we're looking for a high vol breakdown through the opening range, right? So with a 2 out of 3 with volume, we're looking for trend continuation price action, so weak pullbacks, right, into the previous area of resistance, or, right, for breakdown setups. If we're looking for breakouts or breakdown setups, that's where we're using the ORBs, right, to help us visualize separation away from that morning range. So I will say opening range breakdown. Cool. Would anything change here if we went from being a 3 out of 3, right, to a 2 out of 3? Anything change here, guys, setups wise? No, right, we've got 2 out of 3 with volume, so we need to see bigger volume than previous bar, right? Outlier and increasing, not bigger than anything yesterday. We already have that volume standard. So if this now becomes, right, in the next 22 minutes, a red candle, does that change anything for us? Well, so far today, right, we're seeing green price action. Today's price action is green here so far. So I'm just going to keep it easy, right, and say candles green, that's buyers so far this AM, right? But fundamentally, if it's a 3 out of 3 or a 2 out of 3 with volume, you're looking for the same setups regardless, right? All the candle color does is maybe create a little bit of a bias of which setup is more likely. So if we have that volume standard, then nothing really is different between a 3 out of 3 and a 2 out of 3 with volume because we have trending price action and we're looking for trend continuation. What we still need to see, right, is a breakout or a breakdown setup that we could look for. And the color of the candle essentially just gives us a little bit of a warning that there also could be a pullback opportunity. So fundamentally, right, neither setup here is particularly different. And if it candle goes red, we'll turn it into a 3 for 3. So regardless, right, we only have a bearish bias. There's no bull case here, right? So trend line breakdown, increasing volume on that breakdown, strong candle on that breakdown. The only narrative that we're seeing that is quote unquote bullish control, right, is a weak candle profile that's, borderline indecisive at best. So we want to just basically wipe out those weak bulls here this morning prior to us being aggressive. That can happen, right, on either a retest of the trend line or a breakdown through the opening range. So we've just got visual confirmation of weak bulls here already this morning. So we need to invalidate that weakness by seeing outlier momentum breakdowns or outlier momentum rejections that can push us back down towards the path of least resistance. Right, so when we have a 2 out of 3, what we're being told, right, is that we're missing one element and we need to overcome that element prior to being aggressive. That's it, right? If we have a 3 out of 3, it means we've got basically need to see an active setup trigger, right? All right, QQQ. So what's the count here? Does it look like ES by any chance? Hey, Choma, how you doing? Does it look like maybe a day behind what the other index is doing, or does it look as at the same pace? So if it looks to be about a day behind, right, and we're saying that it's possibly consolidating inside a flag pattern, how do we then feel about that volume profile? Does that tell us that we've got trending volume or that we need to see a more impressive volume standard be established prior to us being aggressive? Thoughts, guys? Thoughts? Right? If we're saying a flag is a period of consolidation, does that volume tell us consolidation, or does it tell us something different? Okay, and if it's consolidation, what does that mean we need to see from a volume perspective? No, volume is increasing, right? This volume is bigger than the previous day. But are we willing, like, what are we saying we're saying, right? If that's still increasing volume and we're remaining stuck inside that pattern, what does that tell us about the volume? Hey, Bugs, how you doing? Right, so if that wasn't enough volume for us to get a breakout from that trend, then we need to see bigger volume than that if we're actually going to get conviction that we have trending price action. So although this is a 3 out of 3 here to the downside, within the context of the technical analysis we've just done, we essentially want to downgrade this to being consolidation, right? It's essentially a 1 for 3 where we need to see a bigger volume profile show back up prior to being aggressive. So realistically, right, I would need to get back above that outlier volume on any breakdown here. All right, so probably unlikely for it to occur this morning, but that would be something that you would expect to happen around FOMC, right? Okay, Apple's got earnings here tomorrow. I'm going to stay away from this. Again, middle of its range, chopping about, right? 2 out of 3 here. Not really a strong indication of trending price action, right? Which makes a ton of sense going into its earnings report there tomorrow. And it's a very similar narrative to what the market is telling us, right, with FOMC here. What we've seen essentially in the last, we'll say, 2 weeks, right, is a nice breakdown and then a pretty low vol pullback here, which is creating, well, a low vol pullback right into earnings season and into FOMC, which is creating a little bit of a tug of war environment, right? So we want to get that high conviction breakout here and basically keep doing a good job of avoiding our obvious mistakes. Spent, I don't know, a couple hours last night, right, going through some of the price action that's been available to us in the last week or so. There's not been anything there that's been so good that I feel like I missed something. So in the short term, right, it has to be about controlling basically those expectations and allowing the market to pick its direction and to get through some of these narratives prior to us being super aggressive. If we're just going to build up or lose a lot of money here in the short term, then it's not really worth us kind of putting our capital at stake, right? So again, we want to be very disciplined in how we're defining breakouts from these consolidations, right? We want to be very disciplined in how we're defining what that, say, end of that tug of war looks like. And when we do get that nice PA, it'll be really obvious to us and we'll get the exact same PA, right? Same type of follow through we were getting for the first 3 weeks of April. So let's keep our expectations in check here, right? Understand that the market is giving us a slightly inconsistent story, and we're close to getting through a lot of those roadblocks where things could start to move here pretty aggressively again. Okay, Tesla going into its gap here. We're never going to get bigger volume than what we got post earnings, so fine, right? That's totally reasonable. This was post China news, so again, right, that goes, I'll go crazy. Hey, SG, hey, Michael. And so we want to be a little bit cautious here, right? Again, the gap fill setup would ultimately be the play. But I don't know if this is worth chasing. You need to see bigger volume than what you saw yesterday, which I think could be a challenging standard to get here this AM. Hey, DCS. Okay. Then, yeah, you can run it maybe down towards 173. Maybe a little bit ambitious. Microsoft, right? 2 out of 3. Bouncing inside Thursday's range. Not super enthusiastic here, right? Because I kind of have conflicting narratives on the daily. We've got a really high volume defense there, and then a relatively high volume sell-off into that defense zone. So, like, yes, technically it's a weak pullback or a weaker pullback, but it's kind of still kind of strong, right? Like, I'm not sure if this is giving me a ton of conviction that I have, I don't know, an easy bull case at these lows or an easy bear case at these lows. So I'm going to stay away from this. Right, because basically, if I'm looking to sell, I'm looking to sell into an area where I'm not sure that bulls have been invalidated. If I'm looking to buy here, right, well, I'm probably not going to overcome yesterday's volume month-end selling standard, right? So I'm kind of between like a rock and a hard place here. So I'm going to be NA. Okay, Amazon, big gap up here post earnings, nice. Sell off into earnings at trendline resistance. So you'd like to see it break out over 184, right? That's the spot. So big volume profile. We would anticipate that the post-earnings volume, right, is the biggest volume you get in the quarter unless there's some sort of exception. So that's why we're willing to be a little bit flexible here on a breakout to the upside. So normally when you have a 2 out of 3 with volume, you'd be looking for, rejection here, which we still will have in play. But we could also expect here with not necessarily a 100% conviction, right? But there's a really good pattern that we see, right? The day before earnings, really big volume. The day after earnings, right? A mega standard. So we could overcome basically yesterday's volume here if we see enthusiasm show up. And then at trendline resistance on a big gap up, I can have some flexibility here, right? Again, contextually, I can apply more levels to this. So say 184 on bigger vol than yesterday. And then if we're going bearish, what's the logical rejection spot? So if we're saying that this is a trend line breakout, what would we also expect, or what could we also play if that breakout kind of fails or doesn't come together? Yeah, what would we call that? Like, at what spot, Steven? So it'd be, if we're looking for a breakout to the upside, what's the setup to the downside call? A failed what? That's kind of stupid, but just wanted to emphasize this. Failed breakout, right? Yeah, failed breakout. So we've got trend line resistance, right? It would be a trend line rejection. We've got 1, 2, 3, 4, basically, we'll call it failed moves here already, right? Or trend line rejections. So it would not be unexpected, right, to see bears step in and defend that area before, as we've seen them do that with some conviction. So a high vol rejection off of that trend line, or a failed breakout, right? A red to green reversal, sorry, green to red reversal, would give us some conviction that, hey, this is bear territory, right? And you can really push this down. So we'll call it a trend line breakout, or trend line rejection. And does that tell us the same narrative, right, as like on the ES, right? We talked about how the gap up kind of tells you that maybe you're looking a bit more for the rejection, right, than the breakdown. Does the size of Amazon's gap up maybe create a little bit of a bias here, or does it maybe tell you that the initial setup could be a little bit, say, more aggressive, right? So say if we're going to be looking for a rejection off the trend line on ES, right, we probably have to wait a lot longer for that move to come together than something like this Amazon. So if we are going to see that price action sort of coincide, well, we've got setups that rhyme here to a certain extent, right? So if Amazon now wants to reject and push lower, then that could also be kind of our leading name here to understand that, indexes or ES wants to then also flush through. So generally things like to rhyme, right, or behave in a certain element of unison. So let's see if that can be the case here. Right, and then 2 out of 3 with volume here to the downside means, right, we're looking for either a rejection inside yesterday's range, right, so rejection at that trend line, or, right, a breakdown here to the downside. Well, to get a breakdown, have to be under 175-ish. Unrealistic here this morning. Okay, AMD post earnings gap down, kind of disappointing earnings. Didn't quite beat on the top and bottom line. Trend line breakdown, a little bit of an ascending wedge fake out there, maybe a little bit of a failed trend line breakdown. But if we're actually going to have some conviction that we are getting some, say, follow through lower, I would need to break down under 145 to really be able to push price action. So 3 for 3 here to the downside, right? So I would say a little bit more challenging to play Bollinger Band reversals, but the size of that gap does allow it, and it's essentially the same thesis, right, like we had with Amazon, where we'd expect, right, today to be a very heavy volume day, just because post-earnings historically always is. So that volume profile could logically, right, be bigger than anything we saw there yesterday, and we could comfortably overcome those standards. So if we do see enough buyers step in, right, it could be in play. And then, like I said, under 145-ish, right, for a continuation move. Cool. Okay, failed breakout, weak volume. I'm not interested in NVIDIA. Inside bar, no thanks. We need to break out either into that gap or under, right, that 414. Netflix, not quite an inside bar, but we need to lose that lower trend line. 545. Yeah, you got a bit of space under 545. But again, right, we're looking for a consolidation breakout here. Okay, Google, middle of the range, 1 for 3, no indication of trending price action. Looks like it wants to fill that gap, so let's be careful at that point. VIX climbing up 16, not quite as interesting as it was 3 weeks ago, but a little bit more interesting. So if we can continue to see decent volatility here, absolutely could be in play. Okay, Bitcoin losing that range, starting to sell off here a little bit. Nice little wedge breakdown. Maybe have space down towards, like, I don't know, 50,000 maybe at some point, and then we can kind of go from there. So in general, guys, right, I think we've got a lot of patterns or a lot of names that are giving us periods of consolidation or telling us a little bit of a tug of war going into either their earnings event or today's FOMC. Generally, FOMC, right, not a day where I'm very, very busy. And because of that extra headline risk, I'm going to be sizing down all my plays here this morning. Base expectation or base bias is to the downside, as I do think that's where the majority of the momentum is, but it's not perfect. And I would certainly like to see just a little bit more oomph prior to jumping in and really forcing anything. So we've got a couple of minutes here to market open. I'm going to go make myself a quick cup of coffee. If you guys have any questions, pop them in the chat. We'll go over them here as markets are opening. And hopefully we can see a strong level of enthusiasm show up here this AM. Well, Kulu, I would decide what you think is the busiest time of day, right? So when you're looking at a CL, the open is 9 a.m., isn't it? So instead of using the opening range as 9:30 to 9:31, well, you change it to be from 9 to 9:01. Right here, 9 a.m. is clearly your biggest volume profile of the day. Right, so I would change it to that. Inside the indicator, right, if you go to inputs, you can change that here. Or if you go inside the Pine editor for that, you can change that right to input session to whatever time you want it to be. So here, right, if I've got the electronic trading session, it shows it from 9. If I go to the regular trading hours, which I focus on here on ES, then it shows it to me here, right, on from the 9:31 candle, or the first candle of the day. So process-wise would not be any different. You'd probably just have to do your prep a little bit earlier, right? Because by the time we're starting the stream, it's already happened here, right? So you want to be doing that before you join up. How do we feel about that volume profile? What does that tell us? Good, strong, weak? Yeah, pretty weak volume, right? Pretty much what we expected, though. So if we have a 2 out of 3 bias, right, to the downside, and the opening volume here, pretty weak bulls, we've got a good idea that we could go either a little bit breakdown here or sideways like Oz is saying. Generally, like, right, FOMC day ends up being like a little bit of a positioning trade here, potentially in the morning, and then people just sit on hands, right? Because who's going to front run that news narrative? Say this every month, but I used to not stream on FOMC day. It might be a path going forward, especially in the summer. So I tend to never trade, so that might be a nice way to beat the beat the crowds at the local golf course. Play the Wednesday round. Guys, a couple days into the pro framework concepts that are available out there. Any feedback, guys? Oh man, yeah, they're cheat code, Michael. Like, I mean, not to be too artsy fartsy, but going to like the museum. Hey, Jason, on like a quiet Tuesday morning. Oh my gosh, you have like the whole place to yourself. Oh, it's the best. Good, FW. I've got a chapter I'm putting together about like passing evaluations and stuff like that. And like, I want to do like a understanding the rules type thing. So if you guys have any questions about, you know, different accounts or different drawdowns or like pros and cons between places, I can make a video about that. So it's like a general reference. But I'm trying to add, like I said, a video a day here. Today, put together something on the opening range. Where is my course? So I'm not sure if that chapter is quite published here yet. So we'll get this going at some point. But it'll be risk management, opening range, how to use TradingView, rules, etc. So if you guys have anything else you want added in here, please let me know. I'll try to take care of that this week. Basically just doing one every morning. I don't know if I have an upper limit, Antonin. To be honest with you, it'll be whenever I feel like I've got everything that I want to get off my chest, I guess. I don't know. I'm not sure if there's like a limit. Sounds good. Yeah, I think mostly, I'm pretty happy with the quality of the stuff that's out there and the information that's provided. But I just want to make sure that there's not like some topic that I'm missing that I should cover, some bit of information that I'm missing that I should cover. Because I would say that's probably more where I have blinders sometimes. Oh, 100%, yeah. Always. That's what trading is, though, right? Trading is a constant evolution. Oh, 100%, Greg. Yeah, 100%. It's like once you find what your bottleneck is, right, or you encounter a new one, then you learn how to solve it, right, and go on to the next thing. Yeah, I think Robert, I think that might be the move here next month. I don't know. Sometimes it's weird how this is, but there's like, I mean, it's a limiting belief more than anything. But there's like a level of guilt associated sometimes with not working. It's like, oh fuck, I should be doing something. Today I know realistically probably won't get a trade or won't be getting a full-size trade at the very least. And it's like, oh, I should still do something. So fighting that feeling here today is a good, it's kind of a tough situation. And I always say, right, a good trading mindset, good trading psychology is mostly proactive, not reactive. So you got to make it easy for yourself to sit on hands sometimes, right? Easiest way to do that, like the best way to stop over trading is to literally walk away from your computer. Now, it's hard to stop over trading if you're going to stare at your screen all day long and keep your brokerage software open and do all that kind of stuff, right? Like you're not making it easy for you to follow your plan. It's kind of the same thing. Like if you know it's not going to be a super busy day, sometimes you can make it a little bit more difficult on yourself, right? Okay, so we have a setup candle here, right? But we need to see a confirmation of a break, close, and hold outside the range on an outlier volume standard. Sorry if it's a little bit loud here. I gotta get my windows open here this morning. Sorry about that, guys. No, not today, but someone in my building, I don't know, I think they spelt like 6 gallons of paint thinner And it just smells horrific in here. So I need to thin it out. Oh, dude, it's the worst. Oh, so gross, Jason. It's the fucking worst. Oh. Every now and then, man, I get really sick of living on Saint Laurent. Oh, man, it's, yeah. I hope it's not paint thinner, but yeah, it smells like shit. I mean, it's a nice spot, yeah. I mean, really nice, yeah. But it's just like a little bit chaotic, right? Getting old, Craig. I want it to be quiet all the time. Yeah, I am. I'm like right by Schwartz's, Jason. Literally like 2 blocks down on the same street. So I don't think I've got the volume that I was looking for there on the 3-min. Didn't get increasing volume here yet on the 5, so I'm just going to get a different setup trigger, right? Need to see an outlier volume standard on one of these. It's got close for sure. Like this was just a little bit more fine. But that's not it's not high conviction for me yet. So you're talking about these probably? So likely just someone getting filled with a market order in low volume environments. Pre-market, right? Price action's pretty thin, the volume's pretty limited, so you can really easily absorb basically all the liquidity that's out there, which is why you can see some of those dramatic spikes. Hey Jay, how you doing? Yeah, I mean, I'm expecting a quiet day with FOMC here, but I'm surviving. So again, right, no increasing volume standard there here on this separation. It's hard for me to argue that I've got increasing momentum as we get away from the opening range. Not interested, I'm just looking, guys. I'm just looking. kind of already a grind here. I don't know what to say. Again, weak volume on that little move back towards, but no real separation above, no real separation lower. Yeah, not nearly enough volume to say that that 100 was defended, though. If it was actually a defense of the 100, you would have seen a lot of buyers step in, right? So I wouldn't put too much stock into that yet. It's just a line on a screen until we see basically enthusiasm defend it. What I keep wanting to stress here, guys, right, what I'm trying to really stress with the pro framework, right, is that there are a lot of different ways for a trader to visualize different versions of the same idea, right? So the value, right, in taking advantage of your setup thesis or your setup trigger, like you can execute that same concept, right, in 25 different ways or an unlimited amount of ways. But the common characteristics of those executions are always the same, right? It's like, did you plan out your stop loss? Did you have a profit target? Did you think about your position sizing? And did you have an appropriate risk-reward ratio? From there, how you want to interpret what a weak pullback looks like, what a strong breakout looks like, can be a very, it's kind of like an intimate question, right? It's that's the reflection of your personality that you can use to essentially dominate the market. So the idea is, right, is that you want to see a breakout away from the range, right, and a weak pullback back towards it when you're looking for an entry. And then targeting moves, right, that could be the 2R level, right, that could be that midline, right, that could be whatever. But the idea here is if you plan out that process, if you think about your position sizing before you jump in, and you use the appropriate risk-reward ratios on your entries, then you're going to have a really successful edge regardless of if you want to follow my ideas or not. So having or understanding what the core concepts are and being familiar in what that visualization can be or what that path of least resistance is allows you to be more flexible in your approach towards trading these breakdowns, right? For example, okay, if you want to say that this is got trending conditions here to the downside, you've got that volume shelf, so you're willing to be pretty relaxed on how strong of a setup or how strong of a volume confirmation you're willing to accept, then you can say that that's your setup trigger, right? Here's your break, hold, and close. Here's your weak bullish pullback towards, right, the range. And then if you put your stop loss, right, at the high of your confirmation candle, and you're targeting that 2R range, well, you're still getting, right, way better than 3-to-1 risk reward, right? You're still setting up yourself to have like a positive expected value on that decision, and you have a process that you can explain and repeat. So it's not like you have to take and trade the exact same way that I do, right, and filter out rules the exact same way I do, but it's taking the common characteristics of how I plan out my trade and applying that to your personality is what ultimately is going to create you the most amount of success, right? It's about turning your trades into a formula and essentially not skewing outside of that mathematical equation. If you can behave within that context, then you can really turn any setup trigger, any base concept, right, into a winning technique. But it's about then being consistent in your execution, thinking about your position sizing, and actually trusting your plan to play out when you do enter trades. So justifying things, right, for a 3-to-1 risk reward, but then cutting it when you're up $100 doesn't really create the outcome that you're looking for. So it's about creating a plan, sticking to it, and being able to explain those variables, which ultimately then creates that successful blueprint for you. So it doesn't have to be about trading the same setup triggers I do. It doesn't have to be about trading the same market conditions or being as strict with yourself or anything along those lines, right? I try to stress this on a day-to-day basis, but the way that I trade is the way that I think is best for my personality, right, and for my account. That does not mean it's best for you or that it helps you hit your goals faster. So be selfish, right? Be selfish in your pursuit of your objectives, but understand why you're doing something and create a positive expectation that if you behave within that controlled fashion, you can create an edge for yourself out there in the market, right? That is the base expectation. That's what trading like a pro looks like. It's creating those expected positive value decisions and working within a planned out framework so that you can learn and improve from your mistakes. If you're just going to be throwing shit at a wall and you're just going to be doing all those sort of things, then look, all things considered, you're probably not going to be very successful because you're never going to notice the patterns that cost you money. But if you plan out your trades, you think about the variables you can control, and you obsess over essentially making those details perfect, then you'll find what you need to find to become consistently profitable, right? It's not rocket science. 10 a.m. data, right? ISM. So does everyone understand like what I mean by the pro framework, right? Why that's so important to me, why I'm trying to introduce it, right? Like the objective here is for people to be able to think for themselves, right? And the best way for us to think for ourselves is if we understand why we're choosing a stop loss, why we're choosing an entry price, and why we're choosing our position sizing and profit targets. If we can explain those variables, then you're doing what 99% of traders are pretty much unwilling to accomplish. And you're screwing yourself over, right, by basically ignoring those techniques. So that's why I'm stressing it so much, why I think it's, vital, right, for a majority of traders here. And I would be, doing you guys a disservice if I didn't try to push that on you as much as possible, right? What was the paper trade? Break it down. What was your, you know what I might do, guys? I might do a video here on a journal formula to really push us towards boxing in trades. I might do that. Okay, I would say that's not a very good setup trigger, right? Here now, we could be getting that called confirmation, right, of our separation away from the range. And then we can get a weak pullback, right? Could be in play at that point. But that's a little bit too aggressive, I would say. Type in ES1. ES1 exclamation mark. Perfect, perfect. Guys, does everyone understand the pro framework, what I mean by that? Okay, what I'll do is I'll make a video on how to journal that so we can have a consistent format. But I think everyone, yeah, in that process, right? Stop loss, profit target, work backwards to your entry price. If you can turn that into your muscle memory, dude, at that point, right, you can kind of fuck around and you can be, I don't want to say impulsive, but if you are obsessive with making the math work in your favor and you get good at following your plan, you can be more flexible, right? But you got to earn that flexibility. Not really, Nate. So, like in general, right, the way I like to behave is I'm expecting things to behave consistently, right? And within sort of the patterns of behavior that I'm willing to accept. Outlier events and outlier price action tends to fall outside of those confines, and I say I lose confidence in my ability to execute my edge there repeatedly, right? So I tend to not solve for those like one-off events. I think there is one in the course. Inside the Discord too, Robert, there's a video called Finding the Formula for Success. So there's like 2 videos about that topic. I would take a look at both of them. Yeah, under the Plan Like a Pro section, you want to do, it's step 4, box in your trades. Nice, Oz. Yeah, I mean, that's the beautiful thing about futures, right? The P&L potential is freaking incredible. So Theta ended up being high volume indecision. Sweet. So it's kind of just like a grind here, right? This is not that interesting. What was your stop loss? Oh, so I do use interactive brokers. I 100%, right? I use that for my personal portfolio. But truth be told, man, I get more money, or I can make more money trading with these funded accounts than with my personal portfolio. Like I can get more leverage and more position sizing trading there. So that's why I kind of do both, right? So I do have an interactive brokers account. That's where I do all my personal trade execution from, where I manage kind of like the family fund, stuff like that. But when I'm trading futures, then I'm doing that through the funded accounts. Because I just get way more upside. With interactive brokers too, you got to put down $50K for each futures contract that you want to trade. So from like a margin perspective, it's tough. Those are pretty tough requirements if I want to get anywhere near the size I want to trade with futures. So at the moment, right, when I'm buying, I'm basically buying 40 contracts at a time as my max position size. So with 40 contracts, I mean, I wish I was that rich, right? Kind of thing. I don't have that kind of liquid wealth I can just put into my interactive brokers. So it just creates more asymmetric upside, right? So that's why. Yeah, too aggressive of a position size, Michelle, right? For that size of a stop loss. What you want to do, if your stop loss is going to be high of day, you want to be looking for an entry above the red line. Right? Not kind of in the middle of that range. So if you were to like visualize, get rid of the ORB here for a sec. So your target, 50.43, we'll say. So target here, right? Stop loss 50, 62, 25. And then your entry was 50, 54, right? So if I look at this, and now it's like these three lines, and I'm looking at, okay, here's your stop loss, here's your profit target, and we'll make this a different color just to make it easy. If I'm looking at this here now, I don't know if you really got the 2-to-1 risk reward, right? I wouldn't say that you got that criteria. And you probably could have gotten a better pullback, right, to justify that entry. So I would say far too aggressive, right? You're saying that you have the conservative trade, but it's the conservative stop loss, but the most aggressive entry price. So if you execute this technique 100 times, right, you probably need like a 70% win rate to just make a little bit more than break even. So very limited margin of error on that decision. And so you need to either wait for a deeper pullback, right? Or, find a more more aggressive stop loss, right? So you can't go most conservative stop loss location and most aggressive price, entry price. That's like a combo that doesn't work, right? So that's why the idea of boxing in your trade here, I think, is so powerful. When you see your stop loss, right, in red, you see your profit target in red, and then you see your entry, it's pretty clear their entry was rushed, right? It was pretty fucked. So this is not a trade where you have an expectation of being profitable on, even though you maybe are getting bailed out here short term. This is one where, yeah, it would be, you took a indecisive entry on a speculative downside breakdown. Right? So the way one maybe mental framework that you might find really helpful is that I'm unwilling to take trades that have more than a 4-point stop loss, right? So if I have to get more than a 4-point stop, I start to have the confidence I'm going to get easy or consistent follow through on that ticker down towards some of my profit targets. If you have an 8-point stop loss, right, and your target's 10 points away, the math there just doesn't work, right? There's no asymmetric upside, none of that kind of stuff. Right, so that's why, again, we want to find, if we box in our trades, we can kind of just draw our line to the spot visually, right, where it's 2-to-1. Like if you just do that and you decide to box it in, right, okay, looks like this. All right, so you have it boxed in. Well, now you know an entry here, right, super freaking aggressive, doesn't really give me a good reward. But maybe an entry at this candle, now, okay, I can visually see this, right, and slow down. So that's why the emotion, I totally understand, Michelle. That's, well, the impulsive trading, right, tends to want to lure us all in. So the way that we counteract, right, that we'll call it impulse, right, is by being more deliberate in our decisions and creating good habits that we can rely on, right? Rewarding an impulsive behavior with positive P&L is the most dangerous outcome. Right? Once you box in your trade, the next step, right, then should be at the very least to use your Fibonacci technique. Right? Like I could eyeball that so well, right? Like I was within a tick of where that was on the fib. So once you box out your trade, yeah, work backwards to find your ideal stop loss location. Or ideal entry target, sorry, right? If you're feeling rushed for an entry, it's the wrong one. Every single time. Yeah, 100%, yeah. Oh, you could tell, right? 100%. Like I'm almost convinced that the rushed decision is undefeated in taking my money. Like I can't really think of an exception. But there's also, I mean, there's a fine balance, right, between being decisive and rushing. So the more deliberate we can be, the more specific we can be in our entries, usually the less time pressure we'll feel in executing. And then that will not compound into mistakes later on, right? So if we make a mistake early in our trade, I'd be, I mean, I don't ever want to cheer for like everyone's portfolios to get fucked. It feels kind of gross. But I love a discount. But yeah, guys, we should never feel rushed for an entry, right? Entry should be binary based on a price, not based on a feeling of price. So that's why we want to box it in, right? We can work backwards to finding our area, and if we make that essentially our technique, then it becomes a muscle memory, right, to enter that in and wait for binary events to either trigger or not. So we're just grinding away here, I think, right? Like, look at everything, guys. Let's not get too carried away, right? So kind of what we expected, right, on FOMC. Said this last month, I'll say it again this month. Next month, I'll take it off. It's kind of like, it's a participation medal here to a certain extent. We haven't maybe gotten a ton of action in the market here in the last 7 days, but I also don't think we've gotten our analysis wrong yet. Like, we haven't really, yesterday maybe a little bit of a surprise on the ferocity overall, right, of that sort of selling pressure. I really don't think I've missed anything that I should have. Like, I think I've still seen the market pretty well, which is frustrating. It's like kind of hard to say that you're seeing the market well if you're not getting winning trades. But it's like, yeah, just have to remind yourself sometimes, right, that trading is a zero strike game, right? So I can sit here and watch pitches outside of my strike zone for as long as I want without it impacting my P&L. And maybe it's frustrating to not see like a pitch come down my middle. But if I don't swing at something that's outside of my strike zone, I can't strike out. That, unfortunately, has been more of the price action I've seen here in the last week or so, which is the most annoying. Fuck. I want to be an athlete, you know? I want to be Vince Vaughn. Swinging away. Swingers, right? Yeah, you know, 'cause the movie Swingers. He's like, you know, Mr. Hot Shot, you know, Vegas guy. Yeah, yeah. Sorry, this is where mine went. I watched it a couple weeks ago. Oh, I mean, there's a classic too. This is like the price action equivalent of grinding your teeth. I need a mouth guard to watch this. Yeah, I don't know why I didn't take it off, Jason, to be honest. Probably because it was absolutely pissing yesterday, so I don't want to go spend time outside. It's going to be gross. Yeah, it's annoying. Never ends, this terrible weather. I don't know. Maybe sometimes. I'd miss you right up until the point where I'm stuck in a sand bunker screaming at my clubs. You say every once in a while. That sounds like my every morning when I wake up. Aria, if you go into the Discord, I tagged a message. You got to play hard to get, Kulu. You got to play hard to get. A message here on the 29th, April 29th. If you click the link there, if you just scroll up, just a couple messages should be there. Submit your email and you'll get access to it. So, just so you can see on my screen. So here's current message. So just scroll up a little bit, April 29th. This message, and then Trade Like a Pro framework. Beautiful. So yeah, I'll keep updating some content in there. Yeah, like I said, basically every time I think I need to add something, I'm just going to pop it in there. And hopefully that's a little bit more organized than how things are in the Discord. But I think it's a good resource. Yeah, I've been on Kajabi for a while here now. It gets the job done. I don't know. Not something I want to really speculate on. It's like kind of a gamble. My general belief, though, right, the way that they move it before the meeting is opposite to the way they move it after the meeting. That makes sense, right? So if I see a lot of selling pressure here intraday, kind of seems like the risk reward then skews higher, not lower. Again, I don't know if I would put my hard-earned money on that thesis, but any questions here, guys? I'm kind of just hanging out on hands. I don't have much to do here. And I'm not interested in trading any of this stuff. No, I won't be coming back at 2 p.m. I don't really do that. I'll be doing one-on-one calls. Sounds good, man. Enjoy. So anything you guys want to go over here? Anything on your tongues? Anything on your minds? Any big picture stuff you guys want to talk about? Fair enough. How's your account balance looking though, Michelle? Probably pretty good, right? All things considered. Yeah, so really good. So you're more than halfway there. Nice work, man. So tighten up a few of those entries and you'll get there very quick. So just so you know, right, if your account resets, you won't lose access, right? But if you blow your account prior to the date, you'll get a new account to trade. So you don't need to force it, right? Not a big deal. Oh, okay, I gotcha. That's only for a payout though, right? Who'd you sign up with? So Apex, right, you can pass in 1 day. So you'll be fine. Once you get to a payout stage, though, right, you'll have min 10 trading days. But for your eval, no. And then once you're, like, for example, right now, you still have a trailing drawdown in your evaluation account. But if you were in a live funded account, right, you would no longer have a trailing drawdown threshold. You'd be able to lose everything in theory. Now, obviously, not my recommendation, right, obviously. But you would have that quote-unquote flexibility. Any other questions here, guys? Anything else you want to go over? I'm pretty bored, to be honest. I kind of want to go walk the dog a little bit. I'm not going to chase anything here. Yeah, fair play. Well done, man. Yeah, like I said, decent setup trigger, decent thesis, right? You identified the path of least resistance well, but don't do 2 out of 3 steps, right? Make sure you're getting your entry still rock solid. That's going to be a huge differentiator for you and your performance. So focus on that, right? Of the one thing I did well, one thing I did poorly, one thing to focus on tomorrow. Did a good job identifying the path of least resistance, right? You mapped out your trade well. You had logical stop loss and profit target. But your entry, right, needs a bit of work, needs a little bit of improvement. And if you can kind of sort that out, you'll be in pretty good shape. Nice. Oh, I didn't see if they added a new promo here, actually. It's a good reminder. Okay, so they're still doing the same promo they did for all of April, right? So still that same huge discounts. Like I said, guys, never buy an Apex evaluation at full price. I think we're going to see quite a bit of competition in the future space here. And as long as they aren't like a lot of these poorly backed, CFD shops that we had this time last year, then more competition could create some pretty nice environments for us. But short term, it's hard to beat Apex or, well, as more companies come out, right, and there's more and more competition for customers, well, they tend to lower prices, right, make rules more generous, remove payout restrictions, right? So companies will start to do that, right, to get a bigger share of the market. So we'll see a bit of a give and take, hopefully. What was the kid's name? So any questions here, guys? Any other questions? I'll go final call for questions here. Yeah, so mostly, like the best way to describe this, I like to visualize them with Bollinger Bands, right, in general, and I like to see big gap downs, right, into areas where I have trending price action. So, and Amazon would be a better example here today, right? Would rather look for a high volume rejection, right, inside the upper end, like here, right, a high volume reversal, maybe not as much volume as I would have liked, but you want it to be full body bearish candle, right, second most bearish, yada, 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 on bigger volume than any of the bullish volume you've seen up until that point, once you have a indication of some sort of extended price action. So something like this, right? A little bit better, high volume reversal, right? Open up outside of the Bollinger Bands, and then you're looking for a move back down towards the lows. In general, I would say with this opening range breakout technique, it removes a lot of those sort of breakout or mean reversion trades that look like a Bollinger Band reversal. Because if I get the volume standard at the opening range breakout candle, right, or on the first 5 or 3 or whatever candle I'm looking for, then I can play that mean reversion setup with the opening range breakout, right? So it'll just be more about then being conservative with my profit targets instead of using the Bollinger Bands for those visuals. So Bollinger Bands were fantastic because they give you a binary setup trigger and they give you a profit target that you can kind of work backwards from. But if I'm using the opening range breakout technique, it already fills in that information. So it's more about filtering out for pre-market conditions that don't sit or don't suit kind of those dip buys, right? And then looking for high vol breakouts that confirm those narratives. That makes sense, Kulu? Yeah. Well, if it's multiple candles, I just care about the volume profile, right? So it should be a decreasing volume profile, a weak fall pullback. So if I'm seeing a multiple candle pullback, right, it should be multiple candles are consistently decreasing volume, right? So if you're making higher highs on lower and lower volume, you can keep arguing, right, that those bulls aren't particularly strong. Right? So it's like the opposite of what confirmation is. So what does a confirmation candle look like? Well, a confirmation candle looks like candle 1, 2, or 3 on increasing outlier volume. A low vol pullback, right, can look like, we'll say, 3, 4, 5 on decreasing and non-outlier volume. Right? So you want it to be weak, right? Low volume. Weak looking candle profiles, right? Consistent stories of weak price action. Anything else? Does that make sense, Kulu? Perfect, guys. Any other questions here? Any other questions? Any other questions, team? Any other questions? Sounds good, Michelle. You have a great day, man. All right, guys, so if no further questions, I'm going to kill the stream here for the day. Same deal like always. If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. Otherwise, looking forward to catching up with a few of you in our one-on-one calls here later today and tomorrow afternoon. So we'll chat then. In the meantime, guys, please stay safe out there. Don't do anything stupid going into FOMC. Don't full port your account doing something that I'd get mad at you for. It's not worth it. Right? Control the variables you can control, including your impulses. So I'll be back at it again here tomorrow, right? Starting at about 9 a.m. So we'll catch up then, guys. Peace.